Hi, everyone, and welcome to the WSBA Crypto Roundup for January 12th, 2024. Before we begin, please keep in mind that nothing discussed today should be considered accounting, investment, legal, or tax advice, and the opinions expressed are our own and may not represent the views of our respective firms. I'm here today with my amazing colleagues, Ron Quaranta and David Brill. And we have so much to talk about because so much has happened this week. And before we dive into that, David, why are you wearing that shirt?
Well, Josh, I just came back from Texas, and I am very pleased to say that my Michigan Wolverines are national champions in college football. It's an amazing game. It's very competitive and great to see a lot of fellow alum and students celebrate this momentous occasion. So I am proudly wearing this, and I have been wearing Michigan wear for the last few days.
David won't tell you he was in the VIP box, I'm assuming, David?
I had good seats. I'll definitely say I had good seats. I sat next to Satoshi Nakamoto.
Oh, God.
As I always say, tough life, David Brill.
Yeah. Josh, he flies down to Texas, jumps in the Gulf Stream, goes back. It's a good living.
Oh, boy. We live 24/7 in our space, so it's nonstop, whether it's football or crypto. So, and look what we had happen this week. I've been so fortunate. Michigan wins the championship Monday night, and we get an ETF on Wednesday.
It's a good start to the year.
Yes, it is. Quite good.
It sure was. And one of our friends from the WSBA does not have to eat his hat. He had been saying if it didn't get approved on Wednesday, he would eat his hat. I think he also said he would eat all of our hats. But there would be no hat eating because it was in fact approved.
He was very confident in that wager about eating hats. So shout out to Greg X.
Yes.
Absolutely. So Ron, do you want to let us know what happened?
Oh God. So for those who are not aware, after much fuss and much chaos and much 10 years now of applications, a series of Bitcoin ETFs were approved for listing by the Securities and Exchange Commission in what was arguably one of the weirdest launch of publicly traded instruments, at least that I remember in my 30-year career. David, Josh, I'm suspecting it was weird for both of you as well. What was even weirder, I think, was both the prelude to that, and I know, Josh, we're going to get into fake X posts and the bizarre world of what is this and why are people doing this, to the chair's statement post the release and the approval for the listing, which, Kathy Wood had a really good statement in an interview, I think it was with CNBC or Bloomberg, which was, it is an astounding statement by the chair of the SEC, publicly made, post the approval, where he essentially denigrates the very instruments he was one of the three commissioners who voted on. It just, you almost can't write this soap opera any better.
Yeah, I mean, soap opera or Shakespearean play. If you think about Commissioner Peirce's out damn spot, out I say.
Yes, genius.
With approval. Yes, exactly. She starts it off by saying today marks the end of an unnecessary but consequential saga. And saga it was. Now, Ron, you mentioned fake X posts. David, want to fill us in on what those were?
Sure. So on Tuesday, sometime before the markets closed, there was a post saying that on the SEC's Twitter X site that the ETF was approved. And this was picked up by mass media. And, there was a lot of trading that went on because of that. And the market moved. And look, under any circumstances, nobody should be spoofing the SEC's X account. And, in particular here, the market started moving. And, it actually was interesting in that it portended the move that we might see the next day after it was approved. But nevertheless, it added a little more chaos to this process. And, I think we found out that the SEC may not have been following some of the rules around utilizing two-factor authentication. And that's probably a little bit disappointing for a lot of people to hear. But hopefully, they will put that in place going forward and we won't see this again.
Yeah, Ron, what did you think when you saw it?
I got to weigh in here. So a couple of things, and I certainly agree with David. when I saw that post, David, Josh, I'm sure the exact same thing happened to both of you. Slack blew up. My cell phone blew up. I got a blizzard of emails saying, Ron, it was approved. And, on the face of it, it looked a little odd that it would come out in that form. For me, the thing that always bothers me about this, there's certainly the component of accusing the regulator of telling industry, do as I say, but apparently not as I do. When they fail something as basic as two-factor authorization. When you look at the institutions that are regulated by the SEC, for example, there are real consequences for not invoking two-factor authentication on behalf of their customers. You almost want to ask, what will the consequences be here outside of the politics of hearings that we'll see? I think the other thing that I found troubling was the misinformation of the misinformation, if that makes sense. And when you look at the decision on the day of the approvals, one of the commissioners very publicly said, look at the hack, quote unquote, of the X account of the SEC. This is proof that, or one of the items of proof that, Bitcoin ETFs should not have been approved, that this is a dangerously volatile and, ecosystem filled with miscreants and illicit actors. And that had absolutely nothing to do with the decision, nor was it relevant to the decision. So I'm always struck by the misinformation and the misinformation of the misinformation and how it's used, which really just clouds the public perception. It clouds really cogent discourse with regulators, for example. And to me, it was a shame that this all happened in the way that it did.
Yeah, I mean, certainly we have no reason to believe that it was anyone in crypto. But if it was someone in crypto, I want to kick you.
Yes. And if it was someone in crypto, it's pretty dumb, arguably.
Yeah. Yeah, exactly. And I think now this part has very little to do with digital assets, what I'm about to say. But, having that happen and then having a corrective post from Gary Gensler's own personal account, I mean, this just seems like shades of what we may see in the future with respect to deep fakes and all kinds of, the
Right.
AI warnings that we've been seeing, because trying to figure out what's real, we're so used to looking now to social media for the truth, even though we all know, it's not necessarily the truth, that as David said, that tweet, because the SEC does have an X account, that tweet did move the market.
Yeah. And the other thing I want to mention, Josh, is that when the actual tweet came out, it came out before the market closed, which, right. Look, not trying to be picky here, but that should have been like a 402, tweet, not a 350 tweet or whatever it came out. Like that should have been definitely something after the market, and again, sort of how somehow it sort of percolated out there before that.
And even when the actual order, the approval rather, came out, people were having trouble downloading the PDF. Ron, do you want to talk about that? Or it looked like you were about to say something which might not have been that. So don't feel pressured.
It wasn't going to be on that very directly. I was just going to follow up with David's comment that it will be interesting to see where the investigation of this fake Twitter post goes. Because if I recall correctly, certainly the SEC does its own internal investigation, but now law enforcement has been pulled into the investigation as well. So it'll be really interesting to see. And I'm just hoping it's not one of those sad final, exclamation points on this kind of whole sordid 10 years of trying to get an exchange traded product out there.
Yeah, agreed.
One has to wonder, if you look at LinkedIn and others, we've seen posts by several people, including folks like Anne-Marie Tierney, who've been in the space for a very long time working on
Great post.
Yeah, David, I know you've been working on things for a very long time. I mean, do you guys, and Ron, right? Do you guys think we ever would have gotten here or would have gotten here anytime soon if not for the grayscale decision?
I'm going to dive in with one thing that David's going to, beat me up over. But one of the things I was pretty much approaching the deadline with was I was absolutely convinced that the commission would find a way to delay the approval of the listings. I was wrong. Happy to admit I was wrong. But I was kind of absolutely convinced that it wasn't going to happen. Now, that being said, when we look at the process of it happening, the immediate question that's now begun for a lot of people, and I continue to get these emails, is, well, Ethereum's next, right? ETH is next. So I think people are minimizing the environment of approval for these things. And I think when you look at particularly Chair Gensler's commentary post the decision, he almost basically states, and I'm paraphrasing here, that The only reason that decision was made, and the only reason I suspect he voted for it, was based on the Grayscale court case.
Yeah.
And, that says something to me about the state of play in DC.
Look, I mean, we have to give Grayscale credit.
Yes.
It was, an innovative move to sue the regulator in the way that they did, to seek approval of this. I mean, and it's unfortunate that they had to do that. But we really have to give them credit for making the effort and, just suffering the potential blowback of, A, if the court ruled against them, or B, they could be somehow prejudiced, against other offerings, maybe not getting approved and other ones getting approved because they brought the suit.
Yeah.
So I think we really have to give Grayscale some credit here. Look, I think this has taken too long. Chairman Pierce said it. I said it. I think a number of our fellow, folks in this space believe that as well. And it just, I think when I really reflect on it, the idea that a futures product came out first, really didn't serve the retail public well. Really created an expensive product that retail people weren't going to use. And so, I just don't know in the calculus of things how it was in the best interest, A, to delay this for so long, and then B, to allow a futures product that was really not price sensitive for customers, especially with the rollovers every month. So it just, when you kind of lean out a little further and look at it, you just wonder what's really at play.
Yeah. Josh, I was just going to ask, is it too provocative a question for me to ask? And I've seen some of these in the media, the idea that how much damage was caused to investors because the commission did not approve an ETF for the past 10 years. And it's very easy to beat up on the commission. But is there a logical argument to say, well, if there were ETFs, investors might have purchased those ETFs versus trading on some of the exchanges, or maybe even getting involved in DeFi? I don't know the answer to that, but I'm trying to understand or conceptualize whether or not that's a valid complaint about why the damage the delay did.
Well, look, I think that certainly there's some people who wanted exposure, who would have taken exposure in a securities wrapper like an ETF. And by not having it there and sort of driving people to other exchanges, it had like an indirect effect. I mean, again, ultimately, Ron, my view is that everybody has to take personal responsibility for the choices they make when they buy things and where they buy things and how they buy things and how they store things. But I think we can all agree that some subset of the folks that were affected by BlockFi and FTX and Celsius would likely have had their crypto on their Charles Schwab account if there was an ETF wrapper available to them. So yes, I think indirectly, the commission did, lead people to a place where they couldn't have a safer wrapper to hold crypto and hold Bitcoin in particular.
Yeah.
What do you think, Josh? I know you have a view on this too.
I mean, like you, I think this took way too long. And I mean, there are lots of different ways you can think about it, right?
Yeah.
Of course, you could say, well, Bitcoin is volatile, depending on when they would have gotten in or gotten out. They may have made money, they may not have. Over time, certainly people have, although not investment advice. But I do think, especially given some of the lawsuits that the SEC, or enforcement actions that the SEC has been bringing against exchanges, knowing that the public, many parts of the public are interested in having exposure to digital assets, and yet limiting those avenues to purchasing on exchange, purchasing on the OTC market, or peer-to-peer. I think, and this is something like years and years ago, like Jay Barris and I co-wrote an article, I think in 2019, about this, talking about, actually, in many ways, there would be less risk in having, professionalized assistance with purchasing digital assets and getting exposure. So I think, that's what I think. But one thing that's come up actually in real life, although this is of course real life, is just someone had asked me, they were talking about like, oh, good news, good, exciting, 11 ETFs got approved. But they said, isn't it strange that there's only one asset in this ETF? Usually people, part of the appeal of ETFs is for diversification. And they were like, why would someone ever invest or want to, own a piece of an ETF? And so that's when I brought up, well, there's always gold, right? And the person actually said, oh, actually, yeah, I do. I have exposure to gold through an ETF. And because I don't want to be carrying around gold bars and things like that. And I would just love to know, like, from your perspectives, do you think that's a good analogy? Are there like what value does an ETF bring? Do these approvals bring?
Yeah.
So I'll kick off. So I mean, I get the point. I don't necessarily agree with the person's point, right? The point of the ETF is to make available cost-effective exposure to a particular asset for a broader swath of investors than ordinarily would have been capable. So when we're opening up ETFs, we're talking about retail investors, we're talking about retirement funds, and we're talking about them getting access through what I generally call familiar channels. It is much easier to have a conversation with a middle-aged person who's got a Fidelity account or a Van Eyck account that wants to invest in something, and the diversification can occur within the accounts that they hold. So perhaps the purchase of a Bitcoin ETF is part of their diversification strategy within a broader portfolio of ETFs or other holdings that they might have. So I think it almost sounds like the person you're talking to sort of conflated an ETF with a mutual fund.
Yeah.
Which are sort of, have different goals, have different structures, have different approaches. I see the point. I don't agree with the point. But I think the other thing that I find really, really important and interesting here is the fact that the commentary I'm beginning to see from colleagues and friends that are retail is really, really fascinating. I read one in the news, not a friend or colleague, that noted, a senior, I'm going to put some minimal amount into this Bitcoin ETF with Fidelity. It's a 0% commission or charge for, I think, 6 months. No harm, no foul for him. And he's like, and if it does well, I might buy more. So that really, to me, that shows me, Josh, that people are looking at the availability of these ETFs as part of a strategy. And that's what I think the industry has been trying to talk about for a long, long time.
Well, look, I can certainly see wealth managers putting,
right,
some percentage of their clients' assets, and especially the younger demographic, will want that from their wealth managers. They'll want exposure to it in their portfolio, and they'll like the fact that their wealth manager can do that in a, pretty seamless way. And, people have commodities in their portfolios. People will want some crypto in their portfolios, and right now Bitcoin in their portfolios. So this is really just a logical evolution of this.
Yeah.
And doing it in a way that provides like a safe wrapper for people who don't want to work on a crypto exchange or, self-custody their own Bitcoin.
And to that, if I could just follow on with David, Josh, that's a really good point, because David, and you and I and Josh have this conversation a lot, and we do have it with a lot of our working groups as well. An ETF is much easier than the user experience for a lot of people who are not in the crypto industry to get involved in crypto. Wallets are hard for everyday people, arguably, right, David? I mean, it's just right now the industry still needs to do a lot to make the UX, the user experience for folks getting directly involved in crypto, better. There's a lot of work that's happening, and we can point to Robinhood and Kraken and Coinbase and all of these other providers. But a lot of people are still very comfortable calling their broker saying, buy me a little bit of an ETF, or logging into their Fidelity account. And I think that's a critical component as well.
Yeah, I think when it comes to financial services, people are sticky. They, they finance the accounts that they use. They know the way their accounts work, and they're comfortable using them and getting executions on those systems. So I think that stickiness is not fully appreciated. I think the other thing, that's not appreciated is that really, I think the millennial and we'll say 45 and under crowd want exposure to this, want their wealth managers to give them exposure to this, and expect that. And I think they are a big cohort of people who will be buying, the ETF right now.
Yeah.
Yeah, I mean, one thing that I've seen raised a concern, actually, I'd love to get your thoughts about it, is just about cybersecurity.
Mm.
And we certainly saw this with X, right? With the X post that we talk about. But also, if we think about going forward, now that we have this large inflows, and I think I just saw that just within the past couple of hours that Bitwise, Fidelity, and BlackRock appear to be having the greatest lead so far. At least that's what an article on CoinDesk says. But as of a few hours ago. But one of the things that I've seen talked about as well is this idea that so many of the ETFs rely upon a relatively small number of custodians. And not that those aren't very good about cybersecurity, right? We have no reason to believe that they're not. But, could this influx of capital, which we believe, or I think we all believe, will be substantial, could this invite additional attempts at hacks? And how should we think about this? And is it any different from a traditional situation that doesn't involve digital assets?
David can go first.
Look, in this market right now, because banks can't custody crypto, it's really, as I understand it, it's just Coinbase and BitGo are the two custodians for all of the 11 filings. I may have missed one, and the majority of them are with Coinbase. So yes, there are some points of failure. And look, I think that the sponsors would probably look to Coinbase if there was an issue with the custody of the crypto or if it was mishandled. And I'm sure contractually those situations were played out in their filings, and I think those agreements were shared with the commission. So yes, I mean, I do think there is a concentration risk, but I think those exchanges and Kraken and a couple of others really are at the highest end of cybersecurity and handling it. And also, you don't keep all your Bitcoin in hot storage; you keep it in cold storage. So I think there's a number of things that they can do to mitigate it. But there is some risk. But I imagine it's been addressed contractually.
To me, it's a matter of degree. Like, it is much less risky for a retail investor to be involved in purchasing an ETF with a Fidelity that is custodied with a Coinbase. And I think BNY Mellon actually is custodian for one of them, David. I could be misspeaking. So someone in the audience, and everyone in the audience, please, if you've got comments, please share them with Josh and David and I. But it's a matter of degree. It's much more comfortable dealing with a Fidelity and a Fidelity dealing with a Coinbase or a BitGo. And they're very used to managing the cybersecurity risks. Are they perfect? No. But I would argue they're much more used to the idea that cybersecurity controls are critically important. Yeah. Many of them are SOC compliant, or all of them, I think, if I recall correctly. So it's a far, far cry from, colleagues who'd called me up and saying, how do I open a wallet so I can get on this DeFi thing? And my argument is, you probably shouldn't. You're probably not the person to be doing this.
I do want us to talk about the markets a little bit, and I have some views on where we may see things go. So I do want to hit on that a little bit.
Let's segue right there.
Okay. Let's do it.
Well, so a few data points to start. So there was about 4.5 billion in volume from the first day from the Bitcoin ETFs. Now that included some of GBTC, and it won't be clear right away if that was selling on GBTC of pre-existing shares in GBTC or not. And one of the things we'd see some selling because people were locked in their positions with GBTC. And now with the trust becoming an ETF, that unlocked people's ability to sell their shares. So, and those are the ones, the accredited investors in particular. So I think that's going to be an interesting, thing to pay attention to, and to see how much selling, we see in GBTC and like what the volume is there and what that means. But, my sort of take is that, that pop that we had yesterday around 49,000 is, I think, what will be the high for the next few months. And I think what we're going to see is a gradual sell-off come in the next couple of weeks. And that if we don't really stay above like 46.5 or 48, that we'll just see a sell-off. And I think we'll see a retracement to around when the hype started around the ETF getting approved. So I wouldn't be surprised if we see, a retracement somewhere to the 32 to 36,000 range in the next couple of months.
Can I push back on David a little bit?
Please.
So David, does your hypothesis change if the fund inflows change significantly to the upside?
Well, right now it doesn't, because I think there are a couple of factors going on. And I'm just looking at the current pricing while we talk. So the first thing is that miners are selling at a very, very high clip. I believe it's like a 77-month high that they're selling right now. So that's a lot of sell pressure. And I think a lot of what we call the Bitcoin whales have been selling as well into the new volume that's coming in. So right now I just think there's a lot more sell pressure. So, and I think over time the buy pressure will overtake that and will eat up the selling pressure. But the miners selling, and I think big holders are selling. So I think in the short term, my belief is that that sell pressure will go on for a bit, and will take things down to that like 32 to 36 range.
Yeah. And to be clear, I don't disagree with David. Sorry, Josh. Just, I think it's worth taking a little froth out of the market to get to to have BTC get to a level that's a bit more sustainable in the longer term. But on the GBTC thing, David, I one of the interesting things you had mentioned it earlier, financial services are sticky, right?
Yes.
I would argue that for a bunch of the folks that own GBTC, it's worth keeping it within the organization of a GBTC, as a structure, simply even with the 1.5% fee, simply because I think, if I recall correctly, and I'm not an accountant, depending on their basis, they incur potential tax liability selling out of one to buy into the other. So if it were me, to me, the answer is just leave it there.
Yeah. Well, for me, who was holding it in like a tax deferred account, I didn't feel the impact of that. So, I think a lot of people were buying GBTC because they were trading at a discount. And I think we've all talked about it. It was trading at one point 20 or 25% discount, and now that discount is zero. So I think that some people will hold it for tax reasons, but over time likely will migrate to not, to pay 15 basis points than 150 basis points now. But what's really interesting is Ethereum. So now Ethereum is what we all believe next will be on deck, and we'll see how long that takes. But so now you have another Grayscale product that's selling at a discount to par, to NAV. So it's going to be very interesting to see if people start buying that ETHE, before this process of an Ethereum ETF getting approved, because that's trading at a discount to NAV. So it's a very interesting dynamic, because we saw a lot of people go into GBTC because they were getting a discount. They were getting a 5 or 10% discount on BTC. So they were buying it, and they held it, and once they Grayscale got approved, it went to zero, went to NAV. So I would pay attention to that, and that could be a proxy for some people for buying Ethereum in the short term.
I just hope it's not the drama that we've had with the BTC.
What do you think, Josh? Like, now that from a legal standpoint, now that we have a path, to get approval, and we have the 19b4s for the exchanges, how do you kind of prognosticate how Ether would be treated, for an ETF filing?
I mean, I'd like to think it goes a lot smoother. I mean, given the Grayscale decision, I think analogizing between an ETH future and a Bitcoin future, right? Then again, I mean, I guess what comes to mind was, frankly, Gensler's equivocation in the hearings way back on ETH itself. And so while I would like to think it's a smooth and easy process, I mean, it seems that it may be that regulators will go kicking and screaming down to the mat.
Yeah, particularly at the technology level of it, Josh and David, they'll have to review a proof of stake crypto platform through a different lens. And, we've always had these complicated conversations around, staking and, staking rewards, and whether or not using ETH for some of these. So I think it's going to be it's a different set of complicated conversations for the regulator, I would argue. I don't envy them the task as much as we beat up on them.
Look, I don't think it's as complicated as we think it is. I think it's something that could get done. I think it's just, again, what will be the impetus, and where's the comfort level. Look, my feeling is that this Bitcoin ETF, it may be volatile the next few weeks, and we may see some price action. And look, inflation looks a little higher. I don't know if we're going to get a rate cut in March. Even though sort of there's a majority of people think we are. There are definitely some things out there that could push back against that. So there could be some macro things that go on that make crypto volatile. Irrespective of
crypto volatile.
No, you know what? The crypto volatility has come down significantly, Josh. It's
Yes.
That's fair.
really, a lot of the volatility comes from the leverage. There's really a lot of times you just see that volatility because people are just using a lot of leverage, and then you see a sharp move, and then a lot of people get flushed. So, but I think it'll be interesting to see. But I also think, just from the market's perspective, that I think with Ethereum too, we're going to get into this 2,600 to 2,800 range, and I think we're also going to see a retracement in Ethereum too. So I'm sort of looking for the market to retrace now, maybe somewhat significantly after this event.
I mean, ETH is up 13% year to date, meaning in the past not 11 days.
Yep. Well, think about it, Ron. I mean, so we always look at things in terms of like Bitcoin to the US dollar, or, ETH to the dollar. But a lot of people look at the ratio of like what ETH is trading to Bitcoin, and that's like at a pretty big time low. So even this spike up, is only sort of catching it up a little bit historically. So at one point it was usually like ETH was like trading at 1/10 of what Bitcoin was.
Yeah.
And now you're I haven't looked today, but now you're like less than half of that. So, or maybe you're more than half of that, but it's been trading in a much lower range. But my feeling is that there's going to be a sell-off coming.
And thanks to our friend Greg Murphy for his comment. He says,
"Hey, Greg,
yet determined not to be a security, which might be different than Bitcoin."
Everything's a security according to some people, so we can have complicated conversations about that, Josh.
I mean, I think Ethereum's. I know Gensler's kind of maybe equivocated about it a little bit. Maybe that's a fair way of putting it. But ultimately, I think it's been out of the barn too long, and I think it's just too late in the game to sort of come 7-8 years later and now say now it's a security. Like, I think there may have been a window for that, but I think that time has passed.
Are you going to call it sufficiently decentralized, David?
Well, I mean, I feel like it is sufficiently decentralized. I mean, yes, Vitalik is the face of Ethereum, but yeah, I mean, I do think so. I think that the foundation is decentralized and looking out for the ecosystem, but in a decentralized manner.
And in fairness, that speech that talked about sufficiently decentralized was in fact about Ethereum.
Yeah, exactly. So
I
it was about
that for David.
So look, I think that an Ethereum ETF in 2024 is going to happen. So I'm gonna go out there and put it out there that I think it should happen, but I think it will happen this year.
Will you eat your hat?
I was just gonna say that.
My hats aren't too tasty, but we'll come up with something. Maybe I'll donate something to charity if I'm wrong. Maybe we'll do that, because that's actually at least something beneficial will come out of that.
Nice.
I have a couple of favorite charities. Maybe we will come up with something for that. And
yeah, I wonder whether actually, I mean, I guess there must have been a trend towards accepting Bitcoin and other digital assets as donations. Speaking of charities, but I wonder whether this spot Bitcoin ETF approval will increase the appetite for people to receive donations.
It certainly should encourage that. I mean, I know people who run charities who want to accept crypto, and they have difficulty doing that. They've not found vendors that they've been comfortable with. to do that. And, ideally, that should be easier. I mean, I think that's something, a good that comes out of this, that you could, easily move value and trace the value and make sure it goes to the right people. Bron's chuckling over here.
I'm chuckling. Shout out to Greg Murphy on his comment about wanting gravy with your hat, David. We'll have to talk to Greg about that at the next crypto asset working group meeting.
I think some people owe me steaks for some of these calls, by the way. From
I think I at least owe you one.
Just keeping it real here amongst us. I think somebody owes me a good steak along the way here. But
oh yeah,
But no, look, I'm willing. Maybe we'll come up with a creative bet for an ETF being approved for 2024. But I'm leaning towards a charitable donation or something like that, more than an eating the hat kind of thing. But let's see what it comes up with.
So, do you guys want to talk about what's coming up on Tuesday?
I think Ron should talk about it.
I will definitely talk about it. So, in the midst of all of the mayhem waiting for an ETF approval or not over the holidays, David wisely suggested, and we spun up one of our global webinars. So, on Tuesday morning at 10 a.m. Eastern time for all of our members and for everyone in the ecosystem, we've posted it on LinkedIn and we've shared with members as well. The WSBA is hosting a global webinar to discuss the implications of a spot Bitcoin ETF. Our dear friends David and Josh are on those panels, as well as Greg Exathalis will be there. Several other folks, Richard Johnson will be there, as well as a couple of guests. We'll have Pat White from Bitwave. We should have, I believe, Robert Monterazzi from Luca as well. Fully public. If you're watching this, please go to our LinkedIn page and register. We'll try to post it in the show notes as well. It'll be good to see some of you. We're going to 90 minutes now because there's so much to talk about, but it should be a lot of fun. And please do register. It'd be great to see a bunch of folks, and we will be taking questions after each of the sessions.
Yeah.
So,
go ahead, Josh.
I was just going to say, one thing, David, I think this is, somebody looking to perhaps owe you a steak. Someone is asking, a LinkedIn user is asking, any thoughts on either likelihood and or timeline of a Bitcoin ETF that doesn't have a cash redemption requirement?
That's a great question.
Yep.
I personally wanted to see an in-kind redemption as part of this, and I know Greg will talk through on Tuesday the difference between a cash and an in-kind. Boy, that's a great question. I would say, I think change in regulators' positions, and who's running certain regulatory bodies is what it's going to take to change that. But I think that's something we can absolutely, parse out further with Greg X on Tuesday. But that's something I did want to see.
Just to chime in on that, Josh, it's interesting because if I recall correctly, when the public information was coming out about the last deliberations on the 19B4s, is that what they're called? One of the last of the true sticking points for the commission, as I understood it, was cash versus in-kind redemptions, and the idea that if you want this approved, you must make them all in-kind redemptions. I don't know if that's the hill the SEC will die on going forward, but I would argue they're probably going to stick to that for this foreseeable future, particularly because I suspect they were worried about cash redemptions and the volatility within the market and the impact that might have had. I don't know, but it seems like that they'll stick to that for a while.
Well, I think there's an issue with not wanting folks to be able to redeem in crypto, and the mechanism I could see, and the mechanism by which it would take to receive your crypto. And I think that there was a view that they didn't want potentially lots of these transactions going on.
Yeah.
Because, I think that, implicates a lot of other questions that remain open, including like the discussion about qualified custodians.
Right. Yep.
And that's something that cash redemption elegantly, perhaps.
I could see Josh wanting to read the latest comment from someone on LinkedIn.
Yes. So I can read it. Hester President is what you're saying. Thanks for the input, David. Seemed like the cash redemption got lots of attention late in the game of the review approval process, for sure.
Yeah.
Hester Purse is far too intelligent, far too smart to want to be president.
Well, I think what they're saying is more like, head of the commissioner of the SEC.
That's a very different thing, and yes.
Yeah. But look, I think that was a very interesting process that went on. And I'm going to tease it for Greg X on Tuesday to talk about that some more. But that is something I did want to see and was disappointed not, to see excluded. But on the plus side, this did get approved, and we, have been waiting 8 to 10 years for this to get approved. So
Take the win, David.
Wins when you can get them.
So are we going to be celebrating like many people, on at least on social media, they celebrate Bitcoin Pizza Day, right? Is it going to be Bitcoin ETF Day?
It's very funny because I'm really happy that this has been approved because it provides greater access to retail and institutions in a wrapper people are comfortable with and protections that they didn't have previously. But my native crypto ethos doesn't sort of think of having Bitcoin and an ETF as sort of consistent with the ethos of the crypto ecosystem. So I think I'm going to be happy that more people have access to it, but like my native crypto ethos, probably leans in another direction.
Any chance I get to celebrate with the two of you, I'll do it. So we've put it in as a holiday celebration in my personal calendar.
And we have another message from a LinkedIn user. It says, for future discussion, would be good to understand historical differences in treatment for other commodities, e.g. gold in-kind redemption seems pretty cumbersome.
It's a fair point. I think that's another one. I think we're teeing up a nice list for Greg X for Tuesday. We're going to keep him busy. Might have to get him a good energy bar before we tee him up.
You're going to owe Greg the steak dinner, David, is what's going to happen.
I'd be happy to. I've known Greg a long time. I'd be happy to do that.
He's a great guy. Can I ask one question? One of the interesting things that came out of all of this for me, and I wanted to know what you both thought when I saw some of the bigger names like a Vanguard declining client requests to purchase Bitcoin ETFs. What do you both read into that?
So I did a little research on that. And what I've been told is that Vanguard and Merrill and some other folks, other entities, wait a little while before they list ETFs or make them available to their customers just to see what the volume is, to see if the trade's consistent with NAV and things of that nature. So I think it was kind of a spicy headline for somebody, but I found that, from my research that it's common practice and that, over time we certainly should see how it's handled, but it's not different from the way they've handled a lot of other ETFs.
I wouldn't disagree with you, David, as it's standard operating procedure. But one of the things that caught my eye was the Vanguard statement that very specifically Bitcoin ETFs did not follow their overall investment philosophy for clients, akin to why they don't let, I think it was Vanguard, why they don't let don't let clients buy inverse ETFs, for example, inverse index ETFs, for example, which are arguably riskier for a lot of people. But it was the statement that caught me. I don't disagree with the standard operating procedure, but yeah.
Well, look, everybody has their own view. But I think if you have clients that want to have access to these products, you're either going to sell it to them or they're going to go somewhere else.
Fair.
So, especially now that it's in an ETF and it's so, easy to access. And you have to remember, too, that, the under 40 crowd, under 45 crowd are very facile with, computers and accounts. And so they're not going to be deterred if their money's at Vanguard if they want to buy an ETF somewhere else. I don't think that's going to be a blocker for them. They're probably going to be like, oh, maybe my current, account holders are a little too conservative for me, maybe. But ultimately, they'll find a place to get it. And I think ultimately Vanguard will come around at some point too.
The comments keep coming. So Greg Murphy says many brokers in Canada did the same when the spot ETFs were approved here. Some only accepted unsolicited orders and some would not accept any orders. Some of them have relented.
Yeah.
It's interesting.
Yeah.
So go ahead.
That could make sense. Look, I could see where, the position of the broker is that, we're not going to solicit, Greg, added that, solicit people to buy them. But if people come and say, hey, I want to buy 200 shares of one of the Bitcoin ETFs, that they'll execute the trade. And that's a happy medium too.
Yeah.
I wonder, is there any possibility, just curious, not specific to these specific entities, right?
Yeah.
Not any secret information or anything.
Yeah.
Just whether if someone has a request before the commission of one kind or another, and you see statements by Gary Gensler basically saying the only reason that we approved this is because we had to, because of this case, whether there may be any reticence there. I mean, is that thinking like too conspiracy theory? It sounds like, based on what you said, David, the answer would be way too conspiracy theory.
Well, look, I could see a very conservative risk manager for a brokerage saying, we don't think that this is appropriate for our, account holders. And I could see them splitting it and saying, like, we're not going to solicit people buying it, but if they choose to buy it of their own volition, we're not going to prevent them.
They also look at the demographics of their customer base too, right, David? I mean, a Merrill Lynch has arguably an older clientele than, a Robinhood. My niece doesn't. My 20-year-old niece doesn't have a Merrill Lynch account. She's got a Robinhood account. So, to me, they also have to look at the demographics of clientele as well.
Yeah. I mean, and I think, look, one thing, as bullish as we are on this space, I don't think any of us are telling people that they should be putting like 90, 100% of their assets into this space. Like, I think there should be an allocation, and professional advisors can tell them what the allocation is. But look, I think I wouldn't have an issue if for a period of time they didn't solicit people to buy it, but executed orders people wanted to put in. I think that's a perfectly reasonable approach.
And I guess another question. I'm coming up with lots of questions. I realize we're probably close on time. But just one thing is, there were lots of headlines actually about the fees.
Yeah.
Right? Comparisons of the fees. How much of a driver do you think the difference in fees is or will be? Do you think people are going to go with whom they know? Or
What do you
is this
think, Ron?
I think there are a couple of things at play here, and I think ETF commissions and fees are a very competitive landscape, regardless of the instrument. I think Grayscale, and I can't speak for them, but I think they maintained a very high fee rate simply because I think they bet on the idea that most of their clientele would just accept the transition over to an ETP and not bother with the change. But it is now reflected in my mind in some of the flows. As I think we mentioned, Bitwise or one of the others, it has the highest number of flows. And now, if I remember my research from earlier this morning, I think we're up to $6 billion in flows into some of these funds. I think fees matter. And I think when you're looking at allocations, these are the things that competitors in this space are going to have to look out for. And it's not I don't think it's inaccurate to say, just take away Bitcoin, for example, ETFs generally only end up being two or three large players in the space. It's almost a winner takes all market for ETFs generally. I think State Street was the first gold ETF, if I recall, going back 20 years. And if I recall, they're the biggest by far. So fees matter. Fees matter in a professional investment environment.
So what I would say is that some of it will depend on access. So through their platform, which ETFs will they have access to? So let's say if you're trading on Charles Schwab and you log in, which of the 11 will you have access to? Will you have access to all 11? Will you have access to some subset? So I think some of it has to do with access. I think some of it may have to do, name brand. Hey, I like buying BlackRock, ETFs. I'll buy this one, or I like buying iShares, or maybe I think iShares is BlackRock. But if you like a certain brand of ETFs, you may stay with them. I think I think Grayscale is in a position they cut their fees by 25%, and I think that especially with the cash in kind, I think that some people will be may hold on to it for a while, because even if it's 1.5%, the tax event that they may take for having massive gains, that kind of offset between the two. But I think over time, I think those fees will likely have to get smaller. They may be allowed to trade with a premium. The market may accept that, but I don't think a 5x fee is going to be sustainable.
Yeah.
But I think this is a fascinating experiment we're all watching in real time. Seeing the first ETF, finally seeing it get approved, and then seeing how it trades and seeing who's going to be winners and losers in the ETF issuance space. It's really fascinating. think we'll look back on this, and it'll be a very momentous moment for how the paradigm shift and value, occurred in the markets.
Agreed. Do you think anyone else will get involved in the Bitcoin ETF space, or the 12 or 11 that are out there? That's it. That's the landscape for Bitcoin ETFs. I mean, they're large players.
I suspect there'll be sort of derivative ETFs that will come out, like inverse 2 times or inverse 3 times, and some of those. So I think over time we'll see some of those, and I guess we'll just see who those players are
Yeah.
that do them. I mean, I don't know that any more that are just spot will come at this point, because I don't know what differentiator you can offer.
Yeah.
I mean, I guess you could offer, a rebate or something. If you put assets under management, you'll get, 1 or 100 satoshis, back or something like that in your account. But I mean, I don't think we're there yet. But I do remember that one of the issuers is offering to donate some money, some of their profits to the Bitcoin core developers, to help maintain the ecosystem, which I thought was a pretty smart move.
Yeah.
They just have to market it better, because I don't remember which one it was.
I don't remember the name either.
But it was
someone
a good
in the
idea.
audience, please tell us.
Yeah, somebody in the audience, please tell us. But I did support that. I did like when I read that. I thought that was worth supporting.
It was interesting to me that not a pretty significant number of the approved 11 offered 6 months commission free. I mean, they really are trying to lure clients to buy these, in my mind. I'm sure maybe other ETFs do likewise. I was pretty pleasantly surprised.
What did you think, Josh? I know you don't follow this as much, but just looking at it from the outside, how does it land with you?
The discounts?
Yeah, and the competition and the discounts.
Would it lure you to buy a Bitcoin ETF?
Well, I mean, I don't know that it would lure me to buy. Well, it depends. Was I already not in the space? Yeah, maybe it would. I think it absolutely would, actually.
Right.
I think absolutely, if I were not involved in digital assets and suddenly I was seeing these big names, I do think that I would be more perhaps interested than especially if I'd been somewhat skeptical of the existing methods of obtaining crypto. So yeah, I mean, I do wonder whether some of these discounts are not just competition with each other, but also competition with buying on exchange.
Right.
Right.
Yeah. I mean, I think one thing, and maybe because I know we're running over, maybe we'll tie things off after this, is, one thing for Coinbase that's interesting is, now they're going to see a very big uptick in custody, but they're likely to see, downtick in execution, in trading, because a lot of people will now be trading on ETFs. So I think it's an interesting thing to see how that revenue mix will work for Coinbase, and what that looks like for them.
Yeah, agreed.
Yeah.
So Josh, what are you going to be focusing on this weekend and next week until we all talk again on Tuesday?
That's a great question. I mean, I think I'm going to be reflecting on a lot of this and hopefully trying to come up with something cogent to write about. But I mean, I think more broadly, I'm other than work, I'm really looking at a lot of what this could lead to. There's been talk and articles about whether this is going to lead to a different kind of crypto spring or crypto summer. I think Paul Brody has an article about that right now on CoinDesk, for example. But next week, I will be traveling at some point to Chicago, to the University of Chicago Law School. There is a gathering of certain crypto lawyers. And so that should be interesting to participate in. And I'm excited about it.
Is it being broadcast, Josh? Can we share it with members, or do you know?
No, it's Chatham House.
Oh, got it. Okay.
Yeah.
Sorry, audience.
Really very, very interesting. There's been one previously, and I learned a ton from it. Just from
Nice.
as you guys know, we learned so much from just speaking with folks in our space.
Yeah, very cool.
What about you, Ron? What's on your plate?
So the balance of this day and the weekend and all of Monday, we'll be working with the team on the webinar we're doing on Tuesday morning. So that will be fun. And David, I will also be spending some time, and with your collective permission, I want to make a Ron Q public service announcement. David, you and I, we have different cold storage wallets and hardware associated with them. And you and I have had some interesting conversations about them. And I was looking at, and I won't name the brand, but I was looking at one of my cold storage wallets. And I noticed an interesting NFT transaction where I was rewarded an NFT. And this is my public service announcement to everyone in the audience. If you have cold storage and you see a new transaction, it's not your transaction. So there's this entire ecosystem of scammers who are dropping rewards as NFTs to folks that use some of the wider cold storage wallet capabilities and the hardware wallets, with the idea that if you click on this, get your reward, go to our website. And there are people entering, David, your head's going to explode, their 12-word key phrase to get access to this reward, and the entirety of their cold storage wallet is cleared out. So folks, if you've got a transaction that you don't know and someone rewarded you with NFTs, please be careful. They're not rewarding you with NFTs.
Yeah. No, I think that's a great thing that you shared. It's still a challenge, and it's still something we have to work through as an industry. So for me, I'll be also preparing for our webinar on Tuesday, and I will be indulging in the wildcard weekend, and it's one of my favorite weekends. It's 7 playoff games, and it's literally Saturday, Sunday, and Monday. So while I won't catch them all, they will certainly be on in the background, and I'll be enjoying that. And I'll be going back to the warm weather, which I'll also be enjoying because New York has again gotten cold. But I guess it is January, so it's to be expected.
David will be wearing Go Blue paraphernalia for the next several weeks, I suspect, Josh.
I suspect there may be another Michigan championship outfit on Tuesday. But
nice.
There's a good probability of that.
Excellent.
I will say this, that you don't always get the chance to go to your university and then to actually see them win the national championship. It's like a very great experience. And, I would tell everybody that if their school plays in it in some form, it's really worth seeing. It's very gratifying to see them come through and win. So I've been smiling a lot.
The school pride, David Brill.
Yes.
I will say this, I am very proud to be an alum of Michigan and really enjoyed my time there.
Excellent. All right, Josh, should we wrap it up?
What are you doing, Ron? I don't think you told us.
I'm spending the time preparing for next week's webinar. I'm checking every cold storage wallet's transaction history that I've got. I think there's a lovely bottle of Cabernet waiting for me somewhere in the midst of all of this. And we're also planning for, obviously, the three of us talk about this often, but across the WSBA, we're planning the remainder of the coming weeks and months events. So our ESG quarterly webinar is coming up in March. David, you and I in the very early days of planning the next Crypto Investor Summit in person in New York City. And we are actually planning, believe it or not, probably for Q3, we're working on the logistics. The WSBA will be in London, meeting with some members and running an event that focuses on everything from the difference between US and European capabilities and access to crypto assets to differing laws and regulation, even to things like the accounting and tax implications. So that's going to be a big deal. I'm probably going to be in Chicago, so we're planning that out probably in the next few months as well. So it's still planning phase for a lot of the things we're doing with members of the WSBA. And Josh, you and David are stuck with us.
Well, I'm looking forward to your flying a PJ over to London with all your Doge profits. So
Doge and Shiba. This is not investment advice for anyone in the audience, please. All right, Josh, shall you wrap us up?
Well, thank you everybody for joining us. And we hope you'll join us on Tuesday at 10 a.m.
10 a.m. Eastern time. It's on our LinkedIn page. Drop us any information if you have any questions. info@wsba.co. Thank you for joining us.
Thanks, everybody.
Bye. Thanks, everybody.
Bye.